Greetings and welcome to the Principles of Accounting course by Study Space. This is going to be our 8th chapter, and in this chapter we're going to be studying fraud and internal control as well as the cash control. So in the entire videos I have given a lot of emphasis on clear and true view of accounting and proper representation in the books. The reason why such stress is given on this representation is because the books of accounting are used by investors and creditors, and therefore these individuals require accurate and complete information. If such information is not provided to these individuals, such an act may be regarded as fraud and can be punishable by prison and a sentence. One of the most famous fraud cases was the Sarbanes-Oxley Act. Under this act, a new law came to pass after the greatest con that was played on common shareholders. After the Sarbanes-Oxley Act, companies had to maintain an adequate system of internal control. And had to have their books of accounting attested by a public and third-party auditor. Moving on, we will now look at internal control and its features and principles. Internal control base is the branch of accounting that deals with making sure that the books of accounting are properly adjusted and show a clear image to the stakeholders, as well as show the true value of the company to the stakeholders, so that they are not misleading and they do not commit a fraud by giving the stakeholders incorrect information. Internal control is a controlled environment. They assess the risk of a company under a certain project. They control the activities of the company as well as help management make decisions regarding the company's future and how it should continue to operate. They use information and communication as one of their most important tools. By collecting the proper information and communicating it in its proper form to the shareholders as well as the management. Lastly, they monitor the books of accounting and monitor the company in order to adequately provide information to the stakeholders and the manager. Now, moving forward, we will look at the principles of internal control. Internal control establishes responsibility upon the certain individual who has the control of the company or this particular department in the company. It provides a segregation of duty, thus by breaking duties amongst personnel, therefore to ensure that there is no abuse of power. So for example, a certain manager cannot be the head of HR and would not have power to fire or to dismiss any employees that he did not think of were right, but he would have certain powers to dismiss employees under certain regards with the cooperation of the HR head. Internal control also deals with documentation procedures, such as how the balance sheet is made and how the income statement is shown and represented. It also deals with the physical controls, such as how money is transferred from one bank to another, or how checks are deposited, and how cash is moved within the company or kept. It also has the independent interval verification. This way we can verify how much cash was sent from the company and how much cash was received in the bank. We can also verify how much cash was sent by one of our customers and how much cash was received by us. So for example, say Study Space had a rider go to the bank to submit a certain amount of money, but the rider never appeared at the bank. Study Space could then trace back to how much money they had sent by the rider, and the bank would inform them that that money had not been received by them, and therefore Study Space could allocate and then could further investigate the problem. One last principle of internal control would be human resource controls. As I said, that this creates a segregation of duties, thereby allowing there to be better control of resources such as human resources as well as other resources in the company, and therefore also reduces the risk of fraud and misinterpretation, and along with that any other problems that may occur with transportation of money or transfer of money. Now moving forward, we will look at the application of internal control principles at cash receipts. So firstly, the segregation officer, different individuals receive cash records and cash receipts. These are two different individuals who receive, one receives cash and the other records the cash receipts. Making a certain entry in the books for them. So this documents the entire process. So I'm going to make two columns here to make this easier for you guys to understand. The person who handles cash receipts then documents them. These documents are then sent to human resource controls, who then monitor them. And then lastly, they finally end up to the independent internal verification or the auditor, where he reconciles them with the physical cash process. Similarly, in the cash process, the establishment of responsibility then receives the cash. And then physical controls take over the cash by storing it in a secure location such as a safe or someplace where the cash can be held appropriately. Lastly, it then goes to the independent internal verification or the auditor, who then verifies whether the cash matches the receipts or not. So in case where the cash did not match the receipts, for example, if the cash was 100 and the receipts showed that the cash should have been 110, the auditor would then state out in a press release why such a case had happened, firstly informing the managers, of course, who would then deal with it appropriately, and if it was not dealt with, then the company would be reported. So therefore, these two statements should reconcile with each other. In this video, we will study how this process works when a supervisor sends money to the bank and the cash receipts are recorded by themselves in a smaller, more unorganized business. And then we will also study the method for bank reconciliation statements. For further questions, you can always use the book for more practice questions, as there are ample questions given in there. Thank you for your time, and I hope you enjoyed the video.